Dear students, welcome. Let's start pre-scene mock June 25 p.m. Performance management. Let's start. Question 1. In this video, we'll be discussing section A. Which statements are true? The following statements have been made about enterprise resource planning system ERPs. Implementing an ERP may reduce an organization cost but will likely result in more manual work. Actually, when I'm implementing ERP, I want manual work to be reduced, not increased. First one is false. A customer relationship management CRM uses an ERP module to capture, analyze, distribute relevant customer information within an organization. So they have just written something I would say opposite. Basically, CRP is a module within ERP. ERP is not a module of CRP. So second one is also false. Neither one nor two. Both are false. What is the material usage planning variance? We know that when you're changing your original standards, then there will be a planning variance. And we also know that either it comes favorable or adverse, there's no need to investigate the planning variance. Means planning variance arises due to uncontrollable events. A company produces product X, which requires chemical alpha. The standard cost card for product X shows 2 liters of alpha required per unit at $1.15 per liter. 2 liters of alpha is required per unit. 2 liters of alpha is required in order to produce 1 unit, okay? And 1 liter is costing $1.15. Logically, per unit your cost will be $30. When the budget for the current period was produced, the accountant did not know that production process had been modified to a 6% reduction of the amount of alpha required. This was not reflected in the cost card. While the company budgeted to sell 20,000 units of product X, it actually sold 22,000 units. 43,100 liters of alpha were used, which costed this. The company holds very little inventory. We need to calculate material usage planning variance. So let's see the cost according to the original, I would say standard. So for 22,000 units, 1 unit needs 2 liter of alpha and 1 liter of alpha cost $1.15. That is the original budget. I'm getting 6,75,000. Now the revised standard 22,500, but requirement has reduced by 6%. Alpha requirement has reduced by 6%. So that's why 0.94 into 15. Why we are using 2? Because in order to produce 1 unit, you need 2 liter of alpha. And now we know that basically there's a reduction in the requirement of alpha by 6%. That's why we took 0.94. 22,500 into 2 into 0.094 into 15. I'm getting 6. We can see this favorable usage variance. 6,34,500. So cost has been reduced. So it's favorable 40,500. Because this revised standard cost is less than the original one. Indicate whether each of the following statement about ABC, activity-based costing, have been made are true or false. Under ABC, a company is more likely to make a better pricing decision. True, true, true. When using ABC, subjective judgment on the overhead allocation may be required. Yes, sometimes subjective is required because of multiple cost drivers. If there are multiple cost drivers for the same thing, which one should I choose? Their subjectivity is involved. ABC cannot be used in service organization. False. It is difficult to use, but we do use ABC in service organization, service industry as well. ABC may contribute to a more accurate decision on the discontinue of the loss-making product. Makes sense. True. There's a possibility your product is a loss-making product just because of unfair allocation of overheads, which is the case normally in absorption costing. The biggest objection from ABC to absorption is under absorption costing, we actually see unfavorable allocation of the overheads. And ABC claims that we will tell you the fair allocation of overheads. What is the value of perfect information? Just work on each best outcome to get the value of perfect information. Let's see. A company plans to launch a new product that will be selected from two product choices, A and B. The market manager has provided the following estimate based on the three possible market condition A and B, poor. If I know that market condition is poor, logically I'll go for product A. Medium. If I know that where I can make more profit when the market condition is medium, I'll go for market B. If condition is good, I'll go for market B again. The probabilities of the three market conditions for poor, medium, and good are estimated to be 15%, 45%, and 40% respectively. And manager correctly calculated expected values of each option. That is market A and market B. Of course, between market A and B, B is better. But if I have the perfect information, I can generate even more than what market B is offering me right now. Again, if we know that market condition is poor, we'll not go for B, we'll go for A. So negative 800 into 0.15. If the market condition is mediums, I'll go to market B. 2250 into 0.45. If the market condition is good, I'll go for market B. 3800 into 0.4. Let's see what expected value we will generate with perfect information. 800 negative into 0.15 plus 2250 into 0.45 plus 3800 into 0.4. So let me use the calculator again. 2250 into 0.45 plus 3800 into 0.4. 800 into 0.15. So with perfect information, expected value we'll be generating is 2412.5. This is with perfect information. Without perfect information, obviously I'll go for market B where I can generate the expected value. So this is expected value with perfect information. Expected value without perfect information. $2,232.5. We're just ignoring 3 zeros. Let's see what are we getting. I'm getting 180 and then just add 3 zeros. Why 3 zeros? Because we have ignored 3 zeros while solving. So logically, value of perfect information is $1,80,000. Perfect. What is Chrome current ratio? Simply current asset upon current liabilities. Assuming 360 days in a year to 2 decimal. Chrome has an annual sales. Nothing is mentioned. Entire sale is credit sale. Gross profit margin is 30%. Now listen, if the GP is 30%, it means cost of sale is 70%. Cost of sales is 70%. So if I multiply this with 70%, let's see what I'll get. I'm getting 6,16,000. Cost of sale is 6,16,000. It holds inventory for an average 18 days. So here comes the inventory value. Current ratio means I need current assets upon current liabilities. Cost of sale into inventory holding period. That gives you the value of the inventory. 30,800. Debtors, nothing is mentioned. Entire sale is credit sale. We provide credit to our customer. On average, customer they take 36 days. On average, customers they take 36 days. 88,000. Examiner has given us the cash balance 34,900. Cash 34,900. Here comes the total amount 30,800 plus 88,000 plus 34,900. Total current assets are 1,53,700. Average payable 68,300. There's no other current liabilities. So here comes your current ratio. 1,53,700. Total current asset upon current liabilities 68,300. 68,300. Students, I'm getting 2.25 times. To 2 decimal 2.25. Okay. Either someone is writing 2.25 is to 1 or 2.25 times. Both are acceptable. Which of the following statements regarding zero-based budgeting are correct? The ranking of decision package is a straightforward process because activities are quantified in financial terms. The ranking of decision packages is a straightforward process. Why it is a straightforward process? They are giving you the reason as well. The ranking of decision making packages is straightforward process because activities are quantified in financial terms. Why it's incorrect? That's the question. Simply incorrect. Because ranking of decision making is a straightforward process, not a straightforward process. Not you have to see your priorities, a little bit subjectivity is involved. So it's not straightforward process. Long-term goals are emphasized rather than short-term because zero-based budgeting aligns the budgeting process with the organization's mission. That's incorrect. It says long-term goals are emphasized. Basically, when it's too much zero-based budgeting, we just try to include each and everything which is justifiable. We put that expenditure into the budgeting. So it looks that the entire focus is short-term rather than the long-term. Zero-based budgeting results in a streamline and centralize the budgeting process, saving departmental manager time. It will not save time. You will be putting more time. It is a time-consuming process. Zero-based budgeting eliminates outdated process, operates and reduce budgetary slacks. That makes sense because when I'm preparing the budget every time from zero, so logically we will consider only those expenditures in the budget they are justifiable. What is the controllable return on capital employed? ROCE, ROC. Logically, your ROC is equal to PBIT upon capital employed. Capital employed is equal to equity plus debt. If it is not available, then total asset minus current liabilities will give you capital employed. Controllable ROC. Okay. Division scam of Baja Company had the following balances in the year ended financial statements. We have got sales, operating profit, we have got 1520. Non-current asset 14,200, current asset 4120, current liability. So capital employed very easily we can calculate total asset minus current liabilities. Total assets minus current liabilities. Non-current asset they have given us 14,200 plus 4120. So your total assets are 18,320 minus the current liability which is 1340. We are getting capital employed 16,980. Included in operating costs were 4,95,000 of head office costs recharged to camp. Stop. Basically, 4,95,000 is not a controllable cost. You have just allocated me the head office cost. It's not controllable by us, and we are asked to calculate return on capital employed on controllable. So I will add back 4,95,000 because it is not a controllable cost. Full stop. 65% of depreciation charge of 9,50,000 was assets controlled but not owned by the head office. So the total depreciation is 9,50,000. Out of that, 65% represents to the asset which is controlled by the head office. Either it is or not owned or not, but it is not controlled by my division. It is controlled by the head office. So 9,50,000, 65% of the depreciation is not controllable by us. 950 into 65%. 617.5. Baja company wishes to use controllable return on capital employed to assess performance. Let's see what is the performance. 1520 plus 495 plus 617.5 divide 1520 plus 495 plus 617.5 and divided by 16,980 into 100. Students, I'm getting 15.5%. 15.5%. So far it looks easy. Let's see. Which of the following statement is are true? The following data have been made about the following statements have been made about a company's data. Structured data, whilst not laid out in columns, rows as labels, so you cannot call it structured data. You can call it semi-structured. Examples of unstructured data include social media posts and discussion from a company's customer service, that chat history. That makes sense. First one looks semi, I would say structured rather than structured. What is the budgeted life cycle cost per unit of the new product? So we know that in budgeted life cycle, what do? You have to take I need the estimated cost over the entire life divided by the number of units, you will get the cost. Let's try. A manufacturing company which makes many products is launching a new product. The budgeted information below relates to exclusive product over its 3-year life cycle. Okay, 3 years. Life cycle is 3 years. R&D cost is 2,65,000. I'm ignoring 3 zeros. Manufacturing cost, it is 2,65,000. It's not per year, it is one time. Manufacturing cost fixed is 3,75,000 per year. So the life is 3 years. That's why I multiply by 3. Variable cost is 12.45 per unit. Total units are 1,70,000. I'm multiplying this with 170 because we are ignoring 3 zeros. Selling and distribution fixed cost is 1,35,000 per year. So 135 into 3 plus variable cost is 7.7 per unit. So 7.7 into 170 plus decommissioning cost is obviously one of you which you have to bear at the end of the product life. You will get total cost, whatever comes, divided by 170. Let's use the calculator. 265 plus 375 multiplied by 3 plus 12.45 multiplied by 170 plus 135 multiplied by 3 plus 7.7 multiplied by 170 plus 75. So let's see, what are we getting? What are we getting? Let's 265 plus 375 multiplied by 3 plus 12.45 multiplied by 170 plus 135 multiplied by 3 plus 7.7 multiplied by 170 plus 75. So I'm getting 5,295.5 divided by 170. Students, I'm getting 31.15. All you need is just calculate the entire cost over 3 years and divided by 170. Okay, that is linear programming model has been created to find optimal production plan. We need to find out correct and incorrect objective function. Okay. Arya company produces two products with the following cost. Product X, direct material per unit is 12.5, labor is per unit 18, variable overhead is 3.75. Selling price they have given us 45. It means contribution of product X will be 45 minus 12.5 minus 18 minus 3.0 minus 3.75. Let's see what is the contribution of product X. 45 minus 12.5 minus 18 minus 3.75. I'm getting contribution 10.75. So you can see their objective function. They are saying that is incorrect. Obviously, if X is not correct, no need to check for the Y. Material inequality is 2.5X, 1.5Y, and this. Let's see. 1 kg material costs $5 and it is 12.5, it is 7.5. So 12.5 divided by 5. Let's see the material requirement in product X. 12.5 divided by 5. I'm getting 2.5. Okay. 7.5. 7.5 divided by 5. I'm getting 1.5. So far it is correct. How many kgs are available? Okay, material will be limited 3750. This one is correct. Labor $18 per unit. Labor cost per unit in product X is $18. But hourly rate is 9, which means that $18 $18 is the cost of labor per unit. How many hours it takes? 18 divided by 9, 2 hours. What they have written? And what is this 3000 labor hours? So that's incorrect. You should have written number of labor hours rather than the labor cost. Okay. Indicate whether each of the following potential benefit of using big data for a large retail company are true or false. Improve customer engagement. That's true. Simplifies compliance, not simplifies. It will actually increase your compliance. Reduce the need for skilled employees. When I'm using big data, so I need more skilled people. Reduce data storage. It does not reduce this data storage and processing cost. It actually increases. Zola company manufactures components for smartphones. The industry is highly competitive. It means there's a lot to learn. Their products have short life cycle and technology constantly improving. Indicate whether each of the following statements are true or false. Zola company would benefit from the standard. No. Standard cost as it would ensure input cost. False. Industry is highly competitive. And you are thinking to use a standard costing. Come on, give me what to say. And products have short life cycle. Just-in-time system would be of little use to Zola because it needs high buffer stock. False. In JID, we don't need high buffer stock. Benchmarking would be useful performance management tool. Yes. When industry is highly competitive, so why not to find out a benchmark to make someone a benchmark and compare your performance against that benchmark company's performance. What percentage of reduction in labor hours? Labor hours is required to close the cost gap. An automotive repair company has set a new repair service price 49.95. This new service is estimated to use 10.5 of direct material, 0.75 labor with an hourly rate is 36. The management accountant has calculated there's a cost gap based on target cost. They've given us the target cost. 35.20. Let's calculate the estimated cost. 1 unit will take material 10.50 plus labor hourly rate is 36, but 1 unit will take 0.75 hours. Actually, cost gap is the difference between estimated cost and target cost. Obviously, your estimated cost is higher than the target cost. Difference is the cost gap. So let's find out. Students' estimated cost is 37.5. So cost gap 37.5 minus 35.2. Cost gap is actually 2.3. But this is not the answer. Examiner is asking us what percentage reduction in the labor hour is required. Now listen. 1 unit of this product takes the cost of labor per unit is 27. We want reduction in that cost by 2.3. So here comes the reduction. 2.3 upon 27. Percentage reduction. Student percentage reduction is I'm getting 8.5%. Percentage reduction I'm getting is 8.5%. That's perfect. If there's a 8.5% reduction in labor hours required, then there will be no cost gap. Which of the following is the best measure of resource utilization to be included within the building block model for an audit firm? Which of the following is the best measure of resource utilization to be included within the building block model for an audit firm? Average cost per full-time employee. No. False. You're talking about resource utilization, audit firm. Billable hours as a percentage of total hours worked. Yes, that actually shows the resource utilization. For example, you've got 10 laborers, 10% in your audit firm. They are working for the client, but actually, how many hours are billable? That shows the resource utilization. Labor turnover is nothing to do with the labor hours. It's not utilization of the resources. See, if you have got 15 employees, 20 employees, the more by using their services, the more billable hours I can generate. It means I'm utilizing my resources a lot. Labor turnover means when your labor is not satisfied, they will leave you. Percentage change in total billable hours year on year basis. Resource utilization is B. What is the break-even point in sales? Okay, that's very important, student. You have to read the question properly. They're not asking break-even point in units. They're asking in terms of revenue for the upcoming quarter. A company makes 2 products. When there are more than 1 products, you should be thinking for weighted average CS ratios and something like that, which are sold at a constant ratio 1:4. Product X has a selling price 9.5. CS ratio is 0.5. CS ratio is 0.5 and product Y is having a price 7. CS ratio is 0.7. For the upcoming quarter, budgeted sales are 20,000 units in total, and fixed cost is 75,000. So let's see. There are 2 products, X and Y. Let me just simply selling price 9.5 and 7 CS ratio 0.5, 0.7. That gives us contribution per unit. 9.5 into 0.5, I'm getting 4.75 contribution. Obviously 4.9. Now what is the ratio? Ratio is 1:4. That will give us the total weighted average contribution. 4.9 multiplied by 4. I'm getting 19.6. So logically, if I add both of them, I'll get weighted average contribution. Weighted average contribution is 24.35. That is weighted average contribution. Average contribution. Weighted average contribution is 24.35. Now we need weighted average CS ratio. How will you calculate weighted average CS ratio? We need weighted average contribution, which we have calculated, divided by weighted average sales. That will give you weighted average CS ratio. So 24.35 divided by X is 9.5 into 1, Y is 7 into 4. So 9.5 plus 28. In the denominator, we are having 37.5. So I'm getting a weighted average CS ratio 0.649. Here comes the break-even sales. Fixed cost, they have given us 75,000. Weighted average CS ratio is this 75,000 or a 0.649. Students, I'm getting 1,155,624. Let's see. Third one. Okay. So students, that is all about pre-scene mock June 25 p.m. Student, before we end this class, I just wanted to tell you one thing. When you enroll yourself at ASABIL School of Accountancy, number one, PM is available in Urdu as well as in English. One lecture is just 45 minutes long. Entire PM gets completed only in 90 lectures, 90 lectures, and plus in a WhatsApp support is available. And in my WhatsApp support, no teacher assistant. I personally reply all of your queries. So far, highest marks is scored by one of my students. They are 85. Let's see who is going to break this 85 marks record. In taxation, my student has scored 99. So that's my highest score in ATX, 95, FR 92. In FM, the highest score of one of my students, 94, world top. SBR highest score is 85. AFM we have produced world top. ATX highest score is 95. So a quick just uh, history of getting the highest marks. So thank you very much for watching this lecture. Hope to see you all in my other courses as well.